What up, guys? My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. So, if it is your first time on the channel, hit that subscribe, select all, and like the video if you don't mind. And it is good to be back. I want to just go over a few things. So, last week was a shitstorm, right? It was super good on Monday, and then we started having the Fed speeches in the economic calendar. So, that was... over here we had Brainerd, Kashkari, Williams, and then we had Harker, we had FOMC minutes, then we had Yellen speaking, and then we had initial jobless claims, which has come down a lot, lowest since 1968. However, when jobless claims go down and the economy is thriving, there's no real reason for the Fed not to raise those rates faster. And of course, during the week, they created more uncertainty with how much they're going to raise it and how hawkish they're going to be on the Fed sheet, the runoff of the balance sheet. So, a lot of things, unrattling the markets again. Meanwhile, you have Russia pushing back on Ukraine, saying that the peace agreement was not to their standards. Basically, like, we'll talk more when you get out of our country. And, so that's not mending itself as quickly as the market probably would like. Therefore, probably another commodities rally. You have this week more Fed speaking, Fed Bowman, Bostic, and Evans. And then, of course, you have inflation rate data month over month and year over year for the core. And that is going to be certainly interesting for the markets. We'll see what happens. It is probably time to be defensive. If you look at your macros right here, you're resting on the 200. I made the lines so you can kind of see, kind of making this little channel right here where this is kind of doing this thing. Kind of making a little channel, boom, 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 kind of doing this. So we'll see where that goes. But it is kind of the moment of truth here on the Dow that we stay above this 200. So we'll have to see what's going on. Indicators are still showing weakness across the board that it looks like we will be coming down. Obviously, there's fighting going on, but the cloud is turning. The sell-off on this wick shows weakness, and the indicators are showing that as well. Let's look at the SPY real quick. Okay, SPY, you got a blue ribbon above the 200. You've broken past your minor trend reversal, but again, weakness. Now, I do like that this little candle, it's gotten a lot smaller, so the momentum for the sell-off is slowing, and this could indicate a pivot if we get some volume and we get some action in an upward direction Monday. This could be your first blue candle, and therefore, you got your swing traders will come in. You got your pros will scale in to strength. But again, moment of truth. If it's a red day in the market, this is going to be wiped out, and it's going to be a different story, and we're going to be flirting with more danger. Again, on the SPY, same as the Dow, we're showing weakness, and indicators show that we could be coming down for sure. So last week, Monday was really good, but Tuesday, I had to get defensive. I had to start selling positions that were in the profit because you can lose your profit really fast. And those positions I had, I do think that they will go up, and they'll go up a lot higher, but you can't control the overall market. And when, uncertainty is like the kryptonite for the stock market. Meanwhile, in another page, we had crypto, which was looking better. It was starting to, get some increase over the weekend. Actually, there was some big spikes, and it was looking pretty bullish. And then somebody just decided to sell off, and that creates, more people selling for fear. It creates stops being hit, with the liquidation wicks, things of that nature, and momentum breeds momentum, whether it's going up or down. So, we're going to take a look at Bitcoin. Pretty bummed about that. We are under the 200 again, which is, I think this has only happened a couple times in Bitcoin where we've had a blue ribbon go blue and then turn back. I still have faith, but it just seems like there's just selling going on. And, even when people get bullish from a technical standpoint, there's always somebody there to push it back down. And if you watch on the minute candles, you can see that. If you watch on the hourly candles, you see an hour up, an hour down. So it's kind of going sideways. And sideways is the worst kind of market. If it goes down, we know how to play it. If it goes up, we know how to play it. But if it goes sideways, you can get wicked out, you can get stopped out, you just lose money. It's just not worth being in. So last Tuesday, sold a bunch of stuff in the profit. There was some momentum later in the week where it kind of pivoted and then it got bullish. I think that was Friday. I kind of put some money back into some of those positions, rode that up to about break even or small loss and de-risk, got some of that out, pushed money on the side, waiting to see what happens, is what it is. Market is tentative. They don't like the uncertainty. With the war, the supply chains. I mean, you got, Tesla coming out, great earnings, but, they had a tough time with the supply chain. And now you have NIO shutting down production, due to supply chains. And it's just, it's kind of just becoming problems. You got the food crisis. Our administration wants to print more money while we're in an inflationary environment. You're starting to get the talking heads on TV talking about recessions and stagflations and, on and on and on. And it could be a depression in Russia, a recession, over in Europe and stagflation here. I'm pretty sure it'll just be a global recession, excluding Russia. That's kind of on its own thing. But, all the countries for the pandemic played a role in printing currencies and they had to. Maybe they did it too much, but that's all catching up with us now. So, we're definitely going to have to keep an eye on everything. I'll be here keeping an eye on it for everybody in the Discord and everybody in the group, and then everybody on YouTube as well. Let's see. So the Nasdaq's been getting the brunt of it. Nasdaq fell below the 200, never got a blue ribbon, and fell back below with a red body candle closed below its minor trend reversal. So that's pretty darn bearish, guys. And just like I say, when the blue one is up here and it makes those calipers like it is right there, that's really bullish. Well, this is really bearish when it comes up at this angle and your stochastic is just diving into the dirt. Your MACD is crossing, your histograms have changed colors. Everything is saying, get out of your tech stocks. Now, some of the big winners from last week were Intero Resources, Coal, Peabody Energy. You got other ones, ARC and AMR and some other ones. I would definitely be in a defensive place and try to get as much cash to the side and get out of margin as quickly as possible. And unless there's some positive catalyst that gets the market excitable. When Bernard spoke, she rattled the markets. And then oddly enough, when Bullard spoke, he brought that rally in Friday. And it's because he said he thinks by the end of the year, we'll be at a 3.5% rate. And even though that doesn't sound good to you and I, the reason the market liked that is because previously he had given guidance thinking it would be closer to 5%. So 3.5 is lower. That created a rally. Now, so you basically have a market that's really tentative, directionless, and convictionless, and you have a lot of uncertainty, from the Fed as well as people on major media sites, and there's just a lot of confusion going on to create a direction. Let's just go look at Bitcoin real quick. I'm highly interested in myself. Now, this is what I was talking about. We're coming back under the 200. We broke out. We tested. We failed back below this 45.5 area, came all the way below the 200, came back down to the 44 area, and we're having trouble getting above it. Now, this is looking better. This is not. When we had this candle, it was looking pretty positive, but then it had that big sell-off, which, like I said, momentum breeds momentum. If I look on the hourly, it's going to look grim right now. Look at this. I mean, this is that box of confluence, that 44 to 45.5, and boom, we're under that 200. Ribbons are going. Every time it gets a little spike, and these are hourly, so it was looking pretty good. And then boom, somebody decided to make this big candle, and that just created problems. We can look at the 1 minute. I mean, currently getting a little bit of love. We're at about 42,000. I bought mine at 37.8. I said I would hold until 40. It's been tough, but I am going to hold a little bit of profits, better than none at all. And I'd like to see where this thing goes. I mean, with the stock and crypto market, any little spark, any little catalyst can light this thing up. But you got to be careful doing stuff like buying the dip or being in a lot of margin right now with this type of uncertainty, because what we don't want is, let me go back to the indexes and just show you so we have a visual. What you don't want is, it's easier on the daily. What you don't want is when we have this big downward direction like this, boom, you had lower high, a lower high, and then we started getting higher lows here, and we started to rally, broke the pattern, came up, and now we're making lower highs, and we'll see what happens at the 200 and this minor trend reversal. But if it falls below this line, or back in the pattern, that's going to be dirty. And you're going to want to ride those leverage bears down, short, or just be in cash, simply. Like, you don't want to go long if everything is coming down and you're not seeing the strength or the rally. So again, pivot to pivot directional trading is going to be your best friend. Trade with the trend is your friend, that kind of thing. See what else. The commodity stuff did good. Yeah, I made an alert on this one. This one was crazy. This PHIO, I saw it. I picked it up at $1.44. This thing ran all the way. I got out about $2.19. On Friday. It was a huge gain. Went higher and in after hours as well. So something to watch. Big momentum play. Be careful. What goes up fast can come down fast. But a trailing stop or tight stops on lower time frames could be good. Obviously, your triple leverage NRGU did well. Intera Resources. I mean, this thing is just, you can't stop it. I mean, it's just such a good looking chart. Let's look at the weekly so you can just see. This was 11 or 11 and a half months to get to the handle. This is a big cup and handle. Or sorry, this is 3.5 years. I apologize. 3.5 years over, 11 months to get to the top of the handle, and it's just running. Look at that momentum. You don't get a lot like that. This one is beautiful. You might want to be looking at your SQQQs again as these go up. Let's get the hourly. See, they're starting to go, the SQQQ, that means that the Nasdaq's going down if this is going up. So, yeah, it's not good. You're going to have to play the directions. Moss, Mosaic, still doing good. Commodities, basically. Commodities are doing good. Your soybeans, metals, coal, energy, still the play for now. But don't be too overweight in anything. If you're going to do it, have a mixed bag. If you're in for the long haul, well, pick your favorite conviction ones. I have some CrowdStrike. I have some Pubmatic. I have some different things going on that I like. But, yeah, you definitely want to be careful. And for me, I get really defensive. I'd rather sell my stuff in the profit or get rid of stuff that's at a very small loss and pull that cash to the side. Definitely be out of margin. Be careful. You're going to know when the market rallies. You're going to know when there's a follow through day. You're going to know when all 3 or 4 indexes are going green and it's lifting everything up and the charts start moving. You're going to know, but that's not going to happen because you or me want it. It's going to happen when the market is ready and there's consensus. And remember, the market doesn't care what you want, what you feel, or what you think. It doesn't care about that stuff for me either. So we just have to follow and listen to the market. And right now the market is telling me it doesn't like what it's hearing. It's worried. People are pulling money out. And, another thing I just wanted to bring up briefly was I saw a report that credit, people are using credit more to buy things, whether it's auto loans or more credit cards or whatever it is they're buying. Well, that's usually a sign that not everybody has as much free capital to spend as proclaimed by media. So if a lot of people are using credit and the credit balances are going higher, that's definitely a step in the wrong direction. And remember, the main thing about a recession is slowing growth. And if you have, companies like Neo, as an example, can't get certain supplies, well, that's going to show up on their quarterly earnings, and it's going to decelerate their earnings per share and revenues and things like that. And that goes across the board. You have McDonald's pulling out of Russia. That's going to hurt their earnings. Same with Starbucks. You have the oil companies and energy will do well. We'll see for how long, but I think that could go on for quite a while because I don't see inflation letting up. I don't see the war ending, and I don't see supply chain stuff ending right away. Will it end? Yeah, it all will end at some point. But between now and then, it can be quite damaging. So you want to be vigilant. You want to be looking at everything technically, and you want to de-risk, because that's what the smart money is doing. They're de-risking. You don't want to be the last one holding the bag. Sorry, I don't mean to be bearish. I'm just trying to keep it real. Like the thing about being a stock trader or investor or being in the crypto or stock market, you have to be adaptable. You have to be willing to execute a decision, whether it's different than the decision you had made previously when you purchased something. Things change, okay? Things change, and they change at a rapid pace. So you have to be non-emotional and ready to abort or execute a sell or whatever it may be, or to purchase into momentum, or to double down off a pivot into strength, whatever that may look like. But you have to make your best judgment on a daily, hourly, or minute by minute basis, and you just have to be non-emotional about it and do the best you can. And anytime that the war stuff and the supply chain stuff goes on, commodities are going to be looking good. If the war stuff comes to a peace agreement, equities are going to look good. Anytime that the Fed gives certainty of exactly what they're going to do and when they're going to do it, the market will like that. When there's any bit of gray area in that, the market will not like that. So, we're just going to have to, see where it goes this week. I'm hoping that, we're going to have a big green rally. Remember, nothing just goes down forever, even though it's deflating and it's coming down and people are losing money in their portfolios. There will be these big green rally spikes, and that, might be a sell the rip situation where you get out at even, maybe a little profit or maybe a little loss, but you're pulling your cash to the side, and that's what you're looking for. If you're, just trying to get your money kind of to the side and then wait to see what happens, which is kind of what I want to do for the most part. I'm in, but I got a lot out, and I want to get a lot more out. I just would prefer that personally at the moment. However, the futures are down Sunday night when I'm filming this, but that doesn't mean that it can't change 30 minutes into a market open tomorrow. A lot can happen. You got the Australian market, Japanese market, the European markets, the Chinese markets. I mean, things happen. News can happen. So we'll just see where it goes. But defensive is not a bad idea. And going directionally, like using the SDOW, the SQQQ, the SPXU, against those indexes, to hedge your longs, that's not a bad idea. And, probably wouldn't be too bad. Pretty bummed on this Bitcoin sell. It was doing good. It was doing pretty good, and then somebody just had to drop it down. Now, they only dropped it down about $1,000, which, in crypto isn't the end of the world. It goes up and down that very regularly. But there has been increased volatility to the downside overall lately, and we're getting rejections at key technical levels. Momentum is, we're getting a lot of sideways action, but a drift to the downside. So, when that changes, and then the volume's decreasing. Okay, so kind of have to see where that all goes. But it looks like tech is definitely getting hit, and with tech goes Bitcoin, and with Bitcoin goes all the other cryptos. So, I have to see where it goes, but I'll be here with you all week, and I'm definitely looking to trade if there's momentum to the upside. I'll hedge or be directional to the downside. And meanwhile, I'm trying to double down into a bullish momentum off a pivot to get out at even, a little up or a little down to de-risk myself. Let the smoke clear, let the water settle, let the dance floor clear out, and it's always best to have your money on the side. And then when there is that big bullish day, you get it in right. You have your watch list set, your technical levels, and you push in, and you get it all back, or you get most of it back quickly, and you move on. You can't be emotional. You can't let it drag you down. It's a new week. We got to be positive. It's the stock market, man. It goes up and down, and we're hoping for more up than down when we see these blue ribbons, but rejections and big sell-offs. And to me, I watch the minute candles a lot on Bitcoin, and I see when we get these rallies. So the way it works is with high frequency trading and algorithms, just in a basic general 101 example is, you have these computers, and if one candle goes up, then the other ones will go up with it on the minutes, right? One goes down, it'll go down. That's what happens. But as you and me or institutions or whoever starts buying more in that direction, it'll create more momentum and more high frequency trading. Same thing with the downside. If somebody's going to sell hard, it's going to hit stops, maybe margin calls, fear, panic, and the high frequency trading and algorithms are going to pull it down too, until people like you and I start putting money in and buying and changing that direction. So, this on Bitcoin is, essentially going sideways. It's come down, it's done a lot. There's a lot I can walk you through, but essentially we're in a range, we're kind of in a range, and we don't want to be range bound. We don't want to be sideways. We want directional moves, and we were getting them. And it was feeling really good. But right here, see how you got 1, 2, 3, 4 dojis? It's not good for me for technicals. This is kind of stuff I look at. And coming below the 200, I'm not a fan of that, being long in it. So the good thing about Bitcoin is I'm like a super believer in it. So regardless, if you love Bitcoin and your conviction, you could hold it. It's going to be fine. Remember, on average, even during the down years, it's gone up on average, like 200% a year. So, it's a process. It takes time. Let it do its thing. If you're trading, I like being in on that 1 hour time frame, because you're getting in and out so good. Like, boom, you buy here, sell there, buy back in here, ride it. Looks like you sell here. Looks like you buy back in here, you sell here. So yeah, and then you're out. You skip all this. You buy back in here. You sell here. So, you're in and out, and you're not taking so much damage in case something like this happens where it fails and drops and drops and drops, and where it ends, we will be finding out soon. But I don't like when these two lines spread out, and this angle is nasty. This is awkward, and this is coming down to a place where people usually will start to buy. But see the dotted lines on the screen? See how it goes across, and the bottom of the stochastic touches multiple places. So it's touching here, coming real close here, close here, kind of a double bottom here. You're also getting a double bottom here. So we're getting to that point where, if you notice, this is pretty darn close. So, that's usually when we get a bounce back, is when the stochastic turns like that. And you'll notice your like money flow index, your relative strength index, they'll be down there too. Which I don't have on here right here, do I? Yeah, I've always liked the money flow index because it shows like a line chart of the volume instead of the bars. I can read it either way, but there's only so much room on this darn chart. So my favorite is volume and price action, and I love the EMAs, the 200, the 9, and the 50 especially, but they're all relevant, they're all important. But yeah, again, this is on the daily. And look how low the stochastic actually is, and it's actually kind of at an all-time low for Bitcoin, which would in turn mean that a big rally is coming. It just always has. Look, when this one went up, this happened. When this happened, this happened. When this one happened, this happened. So this was low, it went up. This happened and stayed all the way over. So, this being low is basically, and for the history, for going way back, when it gets that low, that's usually when there's a pop and a rally. So, just, we don't know if it's going up or down, but stochastic being that low is a good sign. This curving is a good sign. We're just not out of the woods yet, it looks like. And we were moving forward, but somebody just decided to sell, and that caused problems. And I will say, if we could, as YouTubers and influencers and people in the community, come together and choose a date, let's just say the date was, May 1st through May 7th. And everybody out there worldwide across the world, you just didn't sell your Bitcoin. You could buy it and you could hold it, but you just don't sell it. And I'd just love to see what would happen. I'd just love to see what would happen. It would just be incredible if there wasn't people constantly trying to push it down. And, Bitcoin is such a beautiful and powerful asset. And, I'd really, really, really like to see this thing I can make another small purple candle tomorrow. And then even a doji that would turn out to be blue while all these are turning with volume coming in, and then that'd be a pivot. So it'd be like your stop here, drop, pivot, move your stop here, and off you go. And we'll just have to see. We'll play it by ear. A lot of COVID cases surfacing in China, and when there's a lot of COVID cases plus the war and uncertainty with the Fed and supply chains, you're going to have a tentative market, guys. Like, it's going to be tricky unless you're just intraday day trading, momentum trading. That's fine. Like, you shouldn't have any problems going direction to direction, but holding longs, like look at SoFi. SoFi is at a 52-week low. They have their earnings are good. Okay, going back 6-7 different earnings in a row, they've been really good. They got a bank charter, but the government in the U.S. is holding back the student loans, and so immediately that's going to hurt a company like SoFi, even though it's a good company. And when that one goes down, you're going to have companies. You'll have financials, but you'll also have other fintech companies like PayPal and Square. It'll probably come down with it. Other software companies. Not necessary. It's useless. Everybody's going to want to be in fast momentum hits or commodities, energy, copper, steel, gold, things like that. Crypto, we'll just have to see where it goes. It's kind of in between for me where it's going to go. I want to stay positive. I want to stay bullish. However, I need about one more day's worth of data to see it. Right now, it looks definitely leaning bearish, but there is enough bullishness in there, and you can tell by the blue ribbon, because the blue ribbon would not be blue unless there were more people that have bought between this time frame and this time frame than sold. And you can also do that by counting the daily Heikin-Ashi candles versus the selling ones. So, I will make a video again tomorrow so that we have one for Tuesday and we can kind of reference this stuff and take a look. And, we'll just have to see what happens with the Fed in the morning and the global markets, as well as just keep an eye on what's going on with Ukraine and Russia. We also got to keep track of this credit market, and we also have to keep track of the administration's sticky fingers for that money printer. They can't stop spending money. They talk about, hey, Trump and part of Biden too spent $8 trillion on COVID relief. Well, COVID relief was necessary. However, they might have expanded or printed too much. Let's just, call a spade there. But, we're in a high inflationary environment, and they reelected Jerome Powell, and this guy's looking old and like he's, about to have a heart attack on us. And he's out there as the patsy saying, yeah, we're gonna raise these rates. We're gonna be, do what we got to do. Every tool in the toolbox. But then you have the administration right behind him saying, yeah, we're gonna print another, multiple trillions of dollars. In fact, it's somewhere between what he wants to do at the $6 to $8 trillion level. Well, if we're already having this type of inflation from the previous $8 trillion, what's another $8 trillion going to do when we already have momentum on a scope of inflation? So these things worry me. I do think there will be rallies. Nothing just goes down. There will be rallies up, and maybe goes down a little bit, then comes up, violently for a few days, and and we'll see that on the macros, and we'll run the momentum and the pivots. But in the meantime, if you're long, it's good to hedge, and it's good to be defensive, and definitely get out of margin when it's like that. So sorry this wasn't like the super bullish video, but I just want to keep it real. I'm positive, I feel good about it. I hate that I made such good technical entries and had to sell some in the profit. And I hate that I had some profits and didn't get to sell fast enough, and those turned into reds. And now I'm having to, go back to my little treasure chest and put more into it. And it is what it is, but I'm not trying to take big L's. And I know that if you cut your losses quick and you let your winners run, and you get out of margin and you get out of trouble, and you live to fight another day. And living to fight another day is more important than dying today. So let's stay positive. Let's keep an eye on it. Monday's going to be telling for us because I'm going to be watching on the macros if we fall below minor trend reversals back into patterns, or below 200 or any type of supports that are technically critical. And I'm watching this Bitcoin like a hawk for us. I'm like every other bull. I want this to go up, but I'm also a realist. Like, we have to keep an eye on volume, sales, selling pressure. We just have to keep an eye on a lot of stuff about that, and we will see where it goes. And we'll probably know. I would say we're gonna know a lot Monday, Tuesday. By Wednesday, we're gonna have a pretty good scope of what's going on by the time that month-over-month or year-over-year core inflation data comes out. So yeah, lot to digest, lot to unpack, lot to think about this week. So just, if you have any questions, throw it in the comments, and I really appreciate you watching to the end. My name is Chris, and welcome to the Wheelhouse.